Hey there, traders, and welcome back for episode number 125 from the StockBandit.tv. It's a place you can always find trading videos to make you better. Well, it's the first of a brand new week, and we're of course going to take a look at the major averages before we head into this week's trading. We know that that's going to influence the individual stocks and how they're going to move, so it always is worth taking a good close look at the indices, taking a good, inventory of the key levels that are out there, and just keeping those on our radar in the days ahead. So up first is the NASDAQ. This index was able to push through to a brand new 52-week high on Friday of last week, and really we've seen really no pullback. We saw a couple of days of very brief weakness here in the latter portion of February, and since then it's basically been up and then sideways for this index. Really no pullback at all. However, even some sideways movement like we've seen here in recent weeks can really do wonders for the charts of individual stocks, and it's been, of course, a very healthy thing for this index as well. That does kind of work off this overbought condition where we were kind of moving higher at this unsustainable pace. Huge rally here, and then some very nice quiet basing consolidation action taking place for a couple of weeks there. Now, last week we did see this index get back on the move, making new highs. We really only saw one day here where volume was anything significant, and that was on Wednesday, but price really did not respond to that at all. It was only fractionally lower. So this index is holding up very well. More importantly, it's now starting to separate itself in terms of price versus this uptrend line. This uptrend line currently is sitting at about the 24.19 level. And by the way, if you're not watching this in full screen mode, you can do that and you'll see this chart much more clearly. But 24.19 is this uptrend line, and that's really been the level that's been defended all along throughout this rally from the February lows. So obviously closing at the highs last week, 24.54. Going to be keeping an eye on that, see if we can build on this further and sort of see some separation between price and this uptrend line, the way we've seen in weeks past, where this index was really, kind of increasing its acceleration, kind of accelerating away from this uptrend line. So it's kind of building this separation here, and that's where the real big moves were taking place. Now, in terms of next levels to be keeping an eye on, let me zoom way out on the chart here, and we're going to take a look at a couple of levels here. One of them is from the 24.73 level right in here, and that's from August of 08. Now, earlier in 08, we also saw kind of a double top take place in May and early June up here at the 25.51. So that'd be nearly another 100 points on top of Friday's closing level. It'd be about 97 points before really that next key area is met. Now, this 24.73 was a very temporary peak for this index back in August of 08, so that may or may not get respected. But if we are able to push through that level, then the next stop would most likely be back up here at the 25.51 level. Now let's take a look at the S&P 500, and this index really just continues to channel higher with these two parallel trend lines here, really marking the pace of this advance from the February lows. The lower trend line has been met a few times. It's been defended each time as well. Last week on Thursday, we saw it briefly penetrated to the downside, but price was able to rally back up and finish inside the channel. And then we saw some follow through on Friday with another gain of almost 8 points. Nothing real significant, but it does show that the buyers are still defending this uptrend line. So currently this uptrend line is about the 1181 level. I'm going to be keeping an eye on that. And then of course this index is really nudging up toward the 1200 level, which is just another round psychological level. If we can nudge past that, let me zoom out here on the chart. The upper end of this channel is really about the 1222 level. So this index really has room to stretch its legs, even staying within the context of this uptrend channel. So still poised for some upside here. Let's see if it can, of course, further distance itself from this lower rising trend line to where we don't have to see that get defended on nearly a day-by-day basis, the way we did last week on Wednesday, Thursday, and heading into Friday. So then of course finally the Dow, this index really has been carving out some very short-term support here about the 10,825 level. That's been respected in recent weeks, and yet on Friday we did see a minor breakout with this index starting to make another 52-week high. It's now nudging right up to the 11,000 level. It actually tagged it on Friday, and again, that's just another psychological level more than anything. Beyond that, this index really has room to run all the way back up here toward this 11,800 area, where it really found some resistance during the summer of '08. So, you know, really has plenty of distance to get up and run here, but the buyers are going to have to produce some follow through, whereas for the last few weeks all we've seen is just kind of this very gradual grind higher and generally some sideways price action. So let's see what this week brings. The indices certainly look poised to move higher if they want to. They've been basing and they've been resting, and that's very healthy to see, but of course the buyers are going to have to step in and really put it to work and you know, get after it if they want to make this market get up and run once again. So thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.